hate this patronising idea that we should tell some people that they can't invest in risky assets. We should tell people what the risks are. And you shouldn't invest more in a high-risk asset than you can afford to lose. That's the principle. The old Latin phrase caveat emptor has been the watchword of the success of the City of London for many centuries. And that's the approach that we should take here. The idea that that we in Parliament, or that the government knows who should and shouldn't be investing in new asset classes is terrible when you think about it. And in fact, it's introducing a new financial exclusion. So yes, getting the rules right around information in particular, that means advertisements, it means on disclosures, it potentially means on conflicts of interest, but allowing people then the choice within a high quality information regime. Yeah. So for instance, on exchanges, it would be reassuring to people to know that their exchange was proper, but we shouldn't be overburdensome, because otherwise exchanges would simply exist elsewhere. Let's not be naive about it. People who are looking to invest in cryptocurrencies know that the value goes down as well as up. If you're thinking of putting an investment in, you're going to look at the line to the left-hand side and you can see it's pretty wiggly. But volatility shouldn't mean government diktats saying who can and can't invest in this stuff. The question on a CBDC is to ask why, right? What's the purpose? After all, in the UK we have a brilliant domestic payment system, and it's one of the most efficient and cost-effective in the world. And for most people, payments these days are free, and for the vendor, they're increasingly free as well. And the idea of a retail CBDC essentially is saying that the central bank, the Bank of England, should be a retail bank for all of us. And there's a lot of problems with that proposal. And not an obvious use case. Where there is an obvious use case is in international payments, which are still expensive, in countries that don't have a good domestic payment system, which includes the US, of course, because of its financial regulation. And then we can see that there are some countries around the world who want a high quality CBDC for strategic reasons, essentially to try to displace the dollar as the international unit of account. And all of those things are good reasons why there should be a central bank digital currency, and why you might want one. The challenge here in the UK is that the core purpose of it, domestic payments, is a problem that we've effectively already solved. And then there's a slightly separate point, right, which is more about stepping back and what is the purpose of this new technology. One of the exciting things about cryptocurrencies, whether they're stable coins or they are untethered, is that it's a decentralized payment system. And asking a central bank to start a decentralized payment system is not what this was invented for. This is about democratizing finance with open standards and decentralizing. So all those reasons mean that I'm less excited about CBDC than I am about some of the other use cases for cryptocurrencies, and of course the blockchain technology. I mean, quite separately, if you want to say we should move the whole payment system onto a blockchain technology, it's a perfectly reasonable argument, but you then need to say, well, what's wrong with the existing RTGS technology? And then you're into a really quite technical discussion about the payment system. Which is important, but isn't really the big issue. Technology is at the cusp of disrupting banking in the same radical way that retail has been disrupted by online shopping, or that music has been disrupted by streaming. Open banking was the first baby steps in this direction. Online banking with a classic high street bank has already disrupted their business model, and they just aren't. You don't need to go into a physical bank anymore. When was the last time you actually stepped into a physical your physical bank? I haven't been into my bank for years and years and years. But those are both the use of digital technology in the existing market structure. If you think about the proposition that banks offer as a means of payment, a store of value, and a unit of account in a currency, those core purposes of having a currency are being disaggregated, because you can now have payments separate from the store of value in a way that has been wrapped up together within the banking system since the money halls of ancient Jerusalem, and so that is the change that we're at the cusp of, and we've got to understand the depth of the disruption, and we've got to make sure that it's managed in a way that protects financial stability and allows democratic access. That's the big thing that's happening, and the debate about who should be able to buy and own cryptocurrency is an important surface debate, but underneath it there's this huge structural change in finance. Financial institutions that don't engage with this topic are asking for the chop. The incumbents can't survive a huge disruption without finding a way to own the future. And we've seen that in the markets that have been disrupted. The players that have found a new business model have survived and in some cases prospered. The ones that haven't changed have withered on the vine. That's been the case with the advent of new technology for throughout the ages. The challenge right now is that doing that with institutions that themselves are so big that the economy, the prosperity of people across the country depends on. That is a big disruption to handle. The question is a good one, and it demonstrates that there is an important role for the state here. Now, tackling money laundering has long been a function of the regulation of the financial system. Tackling financial crime is incredibly important, and we've seen, in fact, some major intervention earlier this month in the United States using existing laws and existing criminal procedures to tackle alleged fraud on blockchain technology. So that must be done. My point is, from the British point of view, the UK point of view, my point is that these technologies exist, they're going to continue to exist, whether we like it or not. So we should engage and, yes, try to tackle anti-money laundering, but not in a way that simply means that the technology is operated elsewhere. Yeah. And that sometimes there is an impulse that must be opposed that says, if we can just stop it happening here, we've solved the problem, when actually we wouldn't have solved the problem at all. We would have just stuck our heads in the sand. What I care about is that there is access to finance, that there's a strong ecosystem that has the skills, the regulatory structures, the openness and transparency that's needed for growth.